An auto retailer and a home builder are on this week's value stock pick list, and our value stock strategist, Tracey Ryniec, is here with us to tell us why. And the auto retailer is Penske Auto Group, PAG, the ticker symbol.
Yep.
You talked about them?
I have. I've done them off and on.
Yeah.
They're a little bit unusual compared to some of the other auto retailers I've covered. They're the second largest in the United States. They're in 17 states. And most people know the name, I think, from Indy car racing and all that stuff with the Penske team, because they're a big sponsor.
Right.
But they're also big in the United Kingdom. They have 152 franchises internationally. Most are in the UK. So that's been kind of a double-edged sword over the last couple of years, because while the US has, really been strong on the auto side, the UK hasn't, because they've been in austerity and basically a recession. So nobody's buying cars. But that's starting to turn around. In the third quarter, Penske saw revenues up in double digits, about 11%, and same-store sales were up 12%. But in the international side, mainly the UK, they were up 20%, which means the UK buyers are finally deciding to turn in their clunkers and get something new. So this is big for them because they're so big over there. So kind of like that aspect of the story. If the US starts to slow down a bit, which we're not seeing yet, but if they do, they got the UK kind of just starting to ramp up. So, things are good. They sell all the brands, and they're doing well on the parts side. They actually increased margins on the parts and services side, which the analysts liked a lot. So they're making money in all their different segments here. You can see the estimates are going up for both this year and next year again. It's double digits earnings growth, which we have seen from the auto retailers the last couple of years. No change in the story so far for 2014, and again, because the UK is so strong, it's a good story. The stock, though, is kind of leveled off here in recent months and pulled back a little bit. So it's given a little bit of opportunity for us value investors to get in a little cheaper. It's trading around 14.5 times. That's, within the value range. It's not super cheap, but if it pulls back a little bit more here, could be a good play. I think people are a little nervous how long this story could go on, though.
All right, let's take a look at the home builder, MI Homes, MHO, the ticker. Foreign company?
No, they're in Columbus, Ohio, actually.
Really?
They've been around a couple decades. They're mainly Midwest, so they do the Ohio market, Columbus and Cincinnati, and then Indianapolis, Chicago. But they're in some of the other hot markets, all of the Texas big cities, like Austin, Dallas, Houston, and they're also in D.C., in the D.C. suburbs, and then in Florida. These are all kind of, pretty hot markets right now.
Yeah.
So they have the home builder story, which we've seen with all the other home builders. Starting to recover here. So they expect huge earnings growth this year, 214%. That's not a surprise because all the home builders, 2012 was okay, but 2013 has been really great for them. And next year, that's the real question. What's going to happen? Mortgage rates are starting to tick up.
Right.
Sales have slowed a little bit. A lot of the home builders have said October foot traffic was a little slower. It's not fallen off a cliff, but it's a little slower. But still, analysts expect about 18% earnings growth for MI Homes for next year. That's still very nice earnings growth, especially coming off of this hot year. Share price, also really interesting because home builder stocks were on fire. One of the best performing sectors in 2012. Started off 2013 pretty hot. Then again, the mortgage rates rose. People started to get nervous. Stocks kind of run ahead of themselves. It's pulled back, pretty decently here. It's trading only 12 times now. So, some of these are starting to become value plays, little bit volatile, I would say. A lot of the home builder stocks are volatile. So you might want to buy into it for the longer haul rather than just, short term, because you are going to see a lot of swings depending on what mortgage rates do and kind of monthly sales and foot traffic and all of that. But the home builder story, housing recovery is still on tap. It's still going. So. Yeah. Gotta like some of these guys.
All right, do you own either of these?
I do not.
All right, well, if you want to look at other stock picks, then all you need to do is get on over to Zacks.com. If you're not there already watching this video, because you will find more stock picks and stock picking strategies there for your consideration. With Tracey, I'm Terry Ruffalo.